Welcome back to the channel. I'm Crypto Trend Trader, and today we're going to be taking a look at Bitcoin. But before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research. So here we have the Bitcoin daily on Coinbase, and we just have one of the indicators pulled up. It's the TJD PSAR B pivots. It's parabolic SAR, which is the red and green, and essentially it just helps to identify the trend. So here on the daily, looking at that SAR, we're basically all the way at the bottom of this Bollinger Band area, and we're below all of the moving averages currently. And basically the SAR is this red trending dots right here, and it's saying we're in a downtrend, so which obviously we are. What we were looking for here was that reaction bounce off the 377 down here, the moving average, which we did get it. We were hoping actually to get all the way up here to like the 8,700 range, but we were expecting at least 8,500, which we did get to the 8,500 range, and then immediately basically sold back off, got rejected. That was the 0.5 fib level as well. I'm going to switch over here actually to a shorter time frame for a minute. So yeah, that's this green line here. That's the 0.5 fib level. So we basically got the reaction we were looking for, but we came down, bottomed out, came back up, bottomed out again, and then we came up, touched that fib level, couldn't even get above it, and then sold off, came down to the 1021 moving averages, tried to get above it again, and you'll see actually this green line is the 50 was lined up perfect with the 50% fib level as well. So the 50 period moving average and the 50% fib level for the move up were lined up perfectly and acted as a massive resistance. So as soon as we sold back off, what I'm expecting to happen here, we got the 1021 cross on the 4-hour, which is basically like a signal that we are moving back into an uptrend. But because this is a delayed reaction, like lagging indicator basically off of the actual reaction move itself, what I'm expecting to happen here, I think this is going to fail. I think this 1021 support is going to fail and cross back over because the way these algorithms work, they have to be fulfilled before they can like reverse or flip to like the next move. And what happens with these bots is one will like front run the other, or some whale steps in and buys up off one of these moves, and then the algorithms don't get fulfilled. So essentially they just keep pushing it down, and then eventually it gets the move it was supposed to get the whole time. So all the front run does is essentially like delay the inevitable. So what happened here is you'll notice we got a huge fake out, just like I always talk about. If you ever watch my videos, guys, you know this is exactly what we talk about. We get the bottom here, we come back up and then sell off, and we actually go, you'll see right here, you can look and see, it tells you the high and low, etc. of the candle, and the low was 77.42 on this guy, and then right here we got the low was 77, I think 01. And basically what it is as soon as this comes back up here, people set their stop loss just below the bottom of the low. So they figure if that low gets taken out, they're going to go into a short or they're going to exit their long position, and they were wrong. So exactly what happens. Exactly what happens. The SAR is triggering the uptrend. All of a sudden we break through that. We put in a new low. We take out all these stop losses for everybody that was long, and then all of a sudden we immediately go into an uptrend. So we break straight back through the SAR, the red SAR, immediately afterwards, and then we get the green uptrend line on it, and then look, we get rejected here, and now we're ready to sell back off. So what it's essentially doing is it's letting the big dogs get out of their position at a more beneficial area, and then it's trapping smaller buyers or people that are less savvy to what's going on. They're trapping them into those positions. Basically, like you're buying the top and selling the bottom. And you know how many people did that. I mean, I'm telling you, they do this all the time. So that's why instead of setting that stop loss right here at the bottom, I set that second trade here at the bottom. So if the price continues to go up, the other trade never even gets hit, that's fine, I'm in profit. If it comes down here, instead of getting stopped out, I enter a new trade right below that candle, right below that. So when it gets taken out, I get entered into a trade, and now look, I bought the bottom, you sold the bottom. Not you specifically, but essentially the market. So there you have it. That's basically if you watch any of my videos, you can see my whole strategy on how that works and everything. And I encourage you to either try it yourself or just like pay attention to it and see, oh man, would that spring have just that fake out, I would have just entered a position at the absolute bottom and then rode this whole wave up instead of missing the move and then wondering, oh, should I enter here or is it just going to sell off? and then finally you enter right here, and then it sells back off, and then you get trapped right here, you get trapped right here. I mean, it's all market psychology. So anyway, enough of that. I'm gonna go. That was a 4 hour basically what we're expecting now. You'll notice our video from the other day. We were just saying we're gonna come up to the 8,500. Tag that. I was expecting or thinking that it might sell off prior to that. We did sell off all the way back down, but again, we got that spring. So if you were short here again, you could have made money if you took profit. Otherwise, you could have shorted through this area or long through this area. But again, I try not to play too many reversals in a downtrend or in an uptrend. I'd rather just trade with the trend. So I was looking to short through this area, add to my shorts rather than buying, necessarily at the bottom here. But I do take profits on my positions when I'm expecting a bounce, especially when the indicators are like clearly showing one. Which this is a scenario. We're in the 4 hour right now, and you'll notice we did get the buy down here. But then, like I said, you would have probably got, if you were a typical person using this and you didn't know what you're doing, or most indicators, you would have just got stopped out right here, and then price would have went for you. So you could have took profit here on that trade. You could have took profit here on that trade, or you could have got stopped out and not re-entered. I mean, that's the thing about these. When there's not a clear pattern and we're not trending, it's much more difficult to make these moves and these calls correctly. So you have to have like a no trade zone basically. So you're not just jumping into every little trade here while we're in a consolidation period, and then you end up losing on them and you get stopped out and then you miss the important one. So now here you'll see on the TJD Stokes slope, we have basically the sell signal coming in here. We're in the distribution zone all through this top area. And then we finally got the hard sell. We got the cross back over, so the slope's turning back red again. And we expect to get continuation down here. Typically, this blue line right here at the 80 will act as support. So sometimes you'll see another bounce off of that. And because it lines up with the 10 and 21, like I said, I don't like to short into resistance or short into support or buy into resistance. So I'll wait for an indicator. Either I'll take the move up here in the distribution zone and get a good price, like on a resistance or something like that, like a moving average or the 50 fib level, whatever. But I'm not going to just short straight into this right here, because what I expect to happen is this is going to keep acting as support until the one time it breaks. So entering a position right here at the support for a short, you're basically going to go immediately into drawdown every time it gets there until it breaks. And as you see, it's already been 1, 2, 3. This is the fourth 4 hour candle, so it's definitely possible we test back up again to the 8,500 range, or even as high as 87, 88, 89, although I don't think that's likely though. I think we are ready to sell back off. But you'll see also the TJD, TD, MACD has given us the red histogram, and it's starting to arch back down. We do still have the blue slope, but this is basically telling you need to exit your positions across the board. And finally, the Fisher is same thing. We're getting the negative slope, and basically, again, this area will act as support a lot of times, this red line. But I don't know. I think the selling pressure is just going to be too much for the market right now. So that's the 4 hour right there. I'm switching over now to the daily. Going back to the daily, we're getting the opposite signal. We're getting the buy signal on the Stokes slope. It hasn't actually crossed back up, but we are getting the hard buy, and this is giving us the accumulation zone. So there's nothing wrong with taking profits on your shorts throughout this zone, or taking a long if you're into that. Again, we got up to the 200 and got rejected. We almost made it to the 10 and got rejected. We were basically trying to stop the cross between the 10 and the 200. And if we don't get above that and consolidate, which it doesn't look like we are currently, obviously it's sold back off pretty violently. Basically, we're going to get the 10 crossing over the 200, and that's going to be another indication to the market. And we're going to keep strengthening away from the parabolic SAR. So basically, if this gets rejected here and we start selling back off, I think it's going to be the violent dump, and we're going to get that next move down. The 377 was acting as support at that 7,800 range, and we did get that double bottom though. And again, I try not to be biased here, although I do think it's going back down, especially the way the market's been reacting here. Now look, all three indicators on the daily are giving us basically the buy signal. This was telling us we bottom. We got the double bottom on the 377. We got the green histogram starting to curve back up, and we're getting the green bars here. And then we got the hard buy and the accumulation zone signal all through here. So again, you could take a long through this position over time, but I think if you just take a long straight into the 200 here, you're going to suffer drawdown. So I think you're way better off looking for a better price. Whether we come back down and then we get the move back up, or if we come back down, hit the new low at like 7,300 or 7,300 range or somewhere around in here. Once we get that, I think this signal is much more likely to play out. I think taking this blindly into the 200 right now is just going to get you trapped in a position with drawdown or stopped out, depending how tight your stop loss is. And again, that's my opinion. So that's why I'm not taking any specific trades in here. I'm not rushing into anything at the moment. But again, you'll see, if we look back here, what happens when you get these signals and you're in a trending market. You see all this red and no greens this whole way through. So that's the trend. We were in an upward trend, so we get a bunch of the red distribution signals saying, oh, hang on, we're topping out, we're maybe topping out. And that's why you don't just blindly sell these, because you get so many in a row. And it's the same way when you're in a downtrend. So now we've entered into a clear downtrend. So this first green zone here, although we may get a nice bounce, like back here off the 20,000 range, although we might get a nice bounce up, it's going to just keep selling off, keep selling off, keep selling off until we get a reversal in the trend. And right now the trend is down. So we need to pay close attention to that, and we need to take discretion before we take these specific just moves here and just take every buy signal we get. Now, sell signals are much more reliable in a downtrending market. So there you go. You know, we don't necessarily want to buy every time, but when we get those sell signals or we hit a strong resistance, you know, that's a good time to enter back into another short, because we're essentially at the top or bottom of the range. And then if that breaks and we get stopped out on that position, that's fine. We had a hard area that we could trade off of. If we just entered a long right here, according to the daily, the likelihood of us suffering drawdown at some point in time, especially before we end up in profit, is very high. It's very high. You're trying to basically take a trade into all the resistance. Because right now we have the 200, the 10, the 200. I mean, we're below all the moving averages. We're getting crosses left and right. I mean, this is not an area to be taking longs. This is an area to be looking for resistance and then shorting off of the resistance, in my opinion. So, again, it's trading with the trend 101, baby. So there we have it. Let's just switch out here real quick to the weekly and check that out. We did find that support, just like I said here. We came exactly down to the 50, tested it, and then we found the support for the bounce, and that's where I was getting the 9,000 range. We can make it up to like 9,100, hit that 21 and get rejected. But again, I think it's much more likely that what will happen is we'll sell off first, find our move down here to like the 89, and then get our bounce off of that. But we are in a three-week downtrend right now, so we could see a bounce. Typically, Bitcoin works in weird little patterns like that. You'll get like 3 weeks up and then one down, or 3 weeks down and then one up. So you pay attention to stuff like that. Can kind of give you an idea. It's very rare you see just a ton of candles powerfully in one direction. Like, I don't think it's likely we're just going to see like 3 big red candles like this in a row. Bitcoin just doesn't work like that. It's very volatile, but there's a lot of bounces. So that's why it's such a good asset to trade versus just necessarily hodling. So here we have, this is all headed down. We came back off the hard sell here. We've only been going down since. That was a good signal. That was a great signal, actually. And you know that when we say when you get 2 in a row and then you exit the control zone, that's a very, very strong signal. That's the ideal signal with the TJD Stokes slope. Each one of these sells or buys is more powerful than the one before. Once you're in this red zone, if you stay in the red zone, or if you're in the green zone and stay in the green zone. Again, we're still technically in an uptrend on the weekly here with the TJD, TD, MACD, but you can see we've been selling off powerfully towards it. We've got the negative slope on the histogram. We found that little bit of support right here off of the 50 and off of the histogram on this, but what's likely to happen now is we're going to get the sell-off and break, and then we are going to flip this over to red, signaling a long downtrend, because this thing does not change often, and when it does, that means we're entering into a long trend. So if that switches over to the red there, Bitcoin's going to be in trouble. You know, if it bounces here and we move back up to the upside, a few weeks from now we might be singing a different tune. We might get a Christmas rally, who knows. But right now, not looking good. And again, the Fisher sold off here to red. We're coming down. We do sometimes find support here on that green line, just like we find resistance on that red line up here. But again, you know, we may be getting that bounce right now. It may come down a little further to the 90, and then that's when we get the bounce here off of these. So we're going to keep our eye out for that. And then finally, the monthly, we just checked that out. But basically, we did exactly like we said. We came down here to the 10, found a little bit of support, got a little bounce, and then it looks like probably what's going to happen is we're going to head to the 21 next, which is going to put us about the 69, 92, or 7,000 range. I think that's very likely.